and welcome. Now, the print for inflation as well as industrial production came out a short while back, and it is good news on the inflation front at least. India's retail inflation eased to the lowest in 5 months, and it came in at 4.31% for the month of January on an annual basis. This is compared to a print of 5.22% that we had seen in December. Now, food and beverage inflation eased to about 5.68%. This was compared to 7.7% we'd seen in December, and this was led by vegetable prices, which further cooled to 11.35% compared to a print of 25.6% that we had seen in December. Now, the headline inflation print was also a tad below expectations. It came in, the Bloomberg poll of economists had estimated inflation at about 4.5%, and it came in a tad lower at 4.3%. Now, for more insights on what she's making of this print, I'm joined by Gaura Sengupta, Chief Economist of IDFC First Bank. Gaura, thank you so much for taking time out for us. Gaura? Gaura, I hope I'm audible. Well, while we get her online, we'll quickly have a look at some of the key internals. Now, cereal inflation rose by about 6.24%. This was compared to a print of about 6.5% we had seen in December. Inflation for meat and eggs also was more or less steady compared to the print in December at about 5.25%. Inflation in eggs eased to 1.27%. This was after rising by about 7% in December. In case of milk as well, inflation was more or less at a similar level as seen in December. Inflation in pulses rose by about 2.6%. This was compared to a rise of about 3.8% that we had seen in December. Clothing and footwear inflation was again very steady at about 2.7%. And that was exactly the print we had seen in December as well. Housing prices too remained steady again. Housing prices were up by about 2.76%. That was compared to a print of about 2.7%, so not much of a change there as well. Clearly, one of the key sort of movers on the inflation front was the easing in vegetable prices. That wasn't entirely on unexpected lines. We were seeing some easing in vegetable prices, and that was a trend that continued for the month of January. Gaura, hi, I hope I'm audible to you now.
Yes, you're audible.
All right, so, what are you making of today's print? It has come in as a positive surprise. We were anyway estimating inflation to ease from the print we had last seen in December. And while it did ease, it eased more than was being estimated, largely led by, again, food and specifically vegetable prices by the looks of it. What are your quick takeaways?
So the moderation is basically led by food and, as you rightly suggested, by vegetable prices. So vegetable prices on a month-on-month basis basically declined sharply. The decline was sharper than expected, hence the headline inflation came a little bit softer than our expectation. The good part about the print is the fact that if you look at even core inflation, though it's slightly up at 3.7, it still remains moderate. If you remove, if you look at core inflation, it's around 3.3%. So very benign core inflation print. Food finally showing substantial easing, especially led by highly volatile vegetables. The fact that the January print has come lower than expectation also indicates that the full year FY25 CPI print will average lower than RBI's estimate of 4.8%. Looking ahead for the month of February, we see the print could be 4%. There's even a chance it could be a little softer than 4% if the decline in vegetable prices that we are seeing in the first 2 weeks of February continues for the full month.
So you did mention that if this trend continues, we might see inflation coming in a tad possibly below the RBI's estimate. Even for the ongoing quarter, the current RBI projection is inflation at about 4.4%. Given the expectation going forward, we will see some undershooting there, right? And is this largely going to continue being led by food or vegetable prices specifically?
So you're right. The Q4 quarter with RBI at 4.4%. We are tracking currently at 4.2. It could be even closer towards the 4%, depending on how food prices evolve. The moderation in inflation will be led by food because it was the food component of CPI which led to the surge. Core throughout this whole period has been very benign, near historical lows. We wouldn't want to see further compression in core because that would be a reflection of softness in growth because core is demand side inflation. So we do expect inflation moderation to be led by food, which is a more supply side story. Core, on the other hand, we are expecting it to gradually inch up, largely because of base effects. So, but it still stays somewhere around the 4% target core inflation. So again, not too much of an upward move in core inflation because currently in the economy we have a negative output gap, which is one of the reasons why core remains soft at currently at 3.7%.
I do want to understand what this print might mean for monetary policy. We have seen the RBI cut rates by 25 basis points at its last meet, and that was partly because the inflation growth trade-off, especially on the inflation front, did appear, there was some space for the RBI to ease in. So in case of the next policy as well, does this sort of set the stage for another rate cut?
Definitely, we are of the view that you'll have another rate cut in April. This entire cycle of interest rate cuts by the RBI is expected to be shallow, and that's mainly because of the depreciation pressures on the INR. So we do expect another 25 to 50 basis points cut by the RBI this policy, with the 25 basis points penciled in for the April policy. The only reason why we are saying it's a shallow rate cut cycle is because of the tremendous depreciation pressures that you're seeing. So monetary policy will have to balance the need of domestic as well as external factors. And currently growth, while showing some signs of moderation, is not so weak that it would justify a very sharp cut in interest rates. More important than interest rate cuts is it how much of the interest rate cuts actually get transmitted. Currently, in the current tight liquidity situation, it's very tough for the RBI interest rate cuts to get actually transmitted via the financial system.
All right. Thanks a lot for those quick views, Gaura. And like always, pleasure speaking to you. Well, stay tuned to NDTV Profit for our continuing coverage.